At 9:23 a.m. Beijing time on January 1, 2026, the Chinese Ministry of Commerce issued a statement that will be remembered as the moment the global silver market died. Effective immediately, all silver exports from the People's Republic of China are suspended indefinitely. No exceptions. No phase-out period. No grandfather clauses for existing contracts. Done. Finished. The tap has been turned off. But here's the part that should make your blood run cold. 17 hours before that announcement, JP Morgan Chase executed the largest single silver purchase in modern history. 50 million ounces. Bought through intermediaries. Paid in cash. Moved immediately to private storage in Switzerland and Singapore. Not held at the COMEX. Not held at the LBMA. Private vaults where it can't be touched, can't be borrowed, can't be hypothecated. Coincidence? Let me tell you something about coincidences in the financial world. They don't exist. JP Morgan knew. They had advance warning. While retail investors were checking TikTok and watching Netflix, one of the world's most powerful banks was positioning itself for the greatest silver squeeze in human history. And they didn't tell you. They didn't warn anyone. They just quietly accumulated 50 million ounces of the one metal that's about to become more valuable than gold. If you don't own physical silver right now, if you've been sitting on the sidelines waiting for a dip, waiting for confirmation, waiting for the mainstream media to tell you it's safe to buy, I have bad news for you. The game is over. China just took their ball and went home. And JP Morgan just bought enough metal to profit billions from what comes next. This isn't fear-mongering. This isn't hype. This is the most significant commodity market event since OPEC stopped exporting oil in 1973. And if you don't understand what this means for silver prices, for the global supply chain, for your wealth and your future, you need to pay attention to every single word I'm about to say. Let me start with the numbers, because without understanding China's role in the global silver market, you can't possibly grasp the magnitude of what just happened. China is the world's third largest silver producer, mining approximately 3,600 metric tons per year. That's roughly 115 million ounces. But production is only part of the story. China is also the world's largest processor and refiner of silver. Mexican silver, Peruvian silver, Australian silver, it all gets shipped to China for refining because they have the cheapest labor and the most efficient facilities. Then that refined silver gets re-exported to manufacturers around the world. China processes an estimated 450 million ounces annually, nearly half the world's supply. When China announced the export ban, they didn't just cut off their own production. They cut off the refining pipeline for the entire Western Hemisphere. Mexican miners can dig silver out of the ground all day long, but if they can't get it refined into deliverable bars, it's worthless. And most of the world's refining capacity is in China. But wait, it gets worse. China is also the world's largest manufacturer of solar panels, electronics, and batteries, industries that consume massive amounts of silver. Before this ban, China was a net importer of silver, bringing in roughly 150 million ounces per year to feed their manufacturing base. But they were also exporting refined silver and finished goods that contain silver. Now, with the export ban, all of that silver stays in China. Every ounce they mine, every ounce they refine, every ounce they import, it all stays inside their borders to feed their domestic industry. The rest of the world, the entire rest of the world, just lost access to approximately 450 million ounces of annual supply. That's nearly 25% of global production and refining capacity. Gone. Overnight. Let me put that in perspective. The total global silver market is roughly 1 billion ounces of annual demand. China just removed 450 million ounces of supply from that market. We were already running a deficit of 200 million ounces per year, draining above-ground inventories to make up the difference. Now that deficit just exploded to 650 million ounces. There is no inventory large enough to fill a 650 million ounce annual deficit. The entire COMEX warehouse, registered and eligible combined, is only 320 million ounces. The LBMA vaults in London hold maybe 700 million ounces, most of which is owned by ETFs and long-term holders who aren't selling. At the current deficit rate, every available ounce of silver on planet Earth will be consumed in less than 18 months. This is not a supply disruption. This is a supply apocalypse. And the Chinese government knows exactly what they just did. This wasn't a spur-of-the-moment decision. This was calculated, strategic, an economic weapon deployed with precision timing. Now let's talk about JP Morgan, because their behavior in the 48 hours before China's announcement tells you everything you need to know about who really runs the financial world and how the game is actually played. On January 13th and 14th, a series of massive silver purchases hit the market. The trades were structured through multiple intermediaries, shell companies registered in the Cayman Islands and Luxembourg, designed to obscure the identity of the real buyer. But my sources inside the bullion market, people who arrange these kinds of transactions, they confirmed it. The buyer was JP Morgan, 50 million ounces, at an average price of approximately $74 per ounce. That's $3.7 billion worth of physical silver. And here's the key detail. They demanded immediate delivery and specified private vault storage outside the banking system. Not COMEX, not LBMA. Private, segregated, allocated. Why does that matter? Because silver held in COMEX or LBMA vaults can be leased, hypothecated, used as collateral for multiple claims. It's part of the fractional reserve system that allows the paper market to function. But silver in private allocated storage is off the grid. It's out of the system. One owner, one pile of metal. Nobody can borrow it. Nobody can create paper claims against it. It's gone. JP Morgan just removed 50 million ounces from the global float. And they did it 17 hours before China announced the export ban. That's not luck. That's not good timing. That's inside information. Somebody inside the Chinese government or somebody with access to that information tipped off JP Morgan. And they acted on it. Now, some of you might be thinking, wait, isn't JP Morgan one of the big silver shorts? Haven't they been suppressing the silver price for years? And you're absolutely right. They have. JP Morgan has paid over $900 million in fines for silver market manipulation. They've been caught spoofing, running stop-loss orders, flooding the market with paper contracts to suppress rallies. They're the bad guys in this story. But here's what you need to understand about JP Morgan. They're not ideologically committed to low silver prices. They're committed to making money. For years, they made money by shorting silver and controlling the price. But when the fundamentals change, when the game changes, they change sides. And that's exactly what they've done. Starting in late 2023, JP Morgan began quietly reducing their short position. By mid-2024, they were net neutral. And now, in January 2026, they've gone massively long with a 50 million ounce physical position. They've switched teams. They're no longer the suppressors. They're the accumulators. And when JP Morgan accumulates, that tells you the suppression is over and the explosion is about to begin. Let me do the math on what this means for JP Morgan's profits. They bought 50 million ounces at an average of $74. Silver is currently trading at $79, just 4 days after China's announcement. That's already a $250 million profit. But that's nothing compared to where this is going. When the full impact of China's export ban hits the market, when manufacturers realize they can't get silver at any price, when the COMEX inventory goes to zero, silver is going to $150, $200, maybe higher. If silver hits $200, JP Morgan's 50 million ounce position is worth $10 billion. Their profit would be $6.3 billion on a $3.7 billion investment. That's a 170% return in less than a year. But I don't think they're planning to sell at $200. I think they're planning to hold this silver as a strategic reserve, as leverage over industrial manufacturers who will be desperate for supply. JP Morgan could essentially become a central bank for silver, lending it out at exorbitant rates to companies that have no other source. This isn't just a trade. This is a power play. While everyone's focused on the price movement, on the charts and the technical analysis, there's a crisis unfolding in the industrial sector that's going to reshape the global economy. And almost nobody is paying attention. Tesla needs approximately 2 million ounces of silver per year for their Powerwall and EV production. First Solar needs 15 million ounces annually for their solar panels. Samsung, Apple, Sony, every electronics manufacturer on Earth, they all need silver. It's not optional. It's not a nice to have. It's a critical input that cannot be substituted in most applications. Before January 15th, these companies had procurement contracts with Chinese refiners. They had supply lines. They had predictability. Now, those contracts are void. China isn't honoring them. The silver that was supposed to ship to Tesla's gigafactory in Texas, it's staying in China. The refined silver that First Solar ordered for their Ohio plant, it's not coming. I spoke to a procurement manager at a major electronics firm on January 17th. He wouldn't let me use his name or his company, but he told me they're in crisis mode. They have 90 days of silver inventory on hand. After that, their production lines shut down. They've been calling every bullion dealer, every mining company, every potential supplier. And they're being told the same thing. There's no silver available at reasonable prices. One dealer quoted them $95 per ounce for immediate delivery. That's $16 above the current spot price. And the dealer said that quote is only good for 24 hours because prices are moving too fast. This is what a supply crisis looks like in real time. It's not theoretical. It's procurement managers having panic attacks because they can't secure the materials they need to keep the lights on. And here's the truly terrifying part. The panic is just beginning. Most companies have 60 to 90 days of inventory. They're not panicking yet because they have time. But in March, when those inventories run low, when production lines start to shut down, the panic buying is going to be biblical. Every manufacturer on Earth is going to be bidding for the same tiny pool of available silver. And prices are going to go absolutely vertical. This is why JP Morgan's timing was so perfect. They bought before the industrial panic. They bought before the supply reality hit home. They bought when silver was still available at $74. In 3 months, when Tesla and First Solar and Samsung are offering $150 per ounce for immediate delivery, JP Morgan will be sitting on the largest private silver hoard outside of China. They'll be able to name their price. Let me zoom out and talk about the geopolitical chess game that's being played here, because China's export ban isn't just about silver. It's about power. It's about reshaping the global economic order. And it's about delivering a devastating blow to the West's green energy transition. The United States and Europe have bet trillions of dollars on solar energy, electric vehicles, and renewable infrastructure. The Inflation Reduction Act in the US, the European Green Deal, these are massive government programs designed to transition away from fossil fuels. And every single one of these programs is dependent on silver. Solar panels use 20 grams of silver per panel. EVs use up to 50 grams per vehicle. You cannot build a green economy without silver. China knows this. They've spent the last 20 years becoming the dominant player in solar panel manufacturing, battery production, and rare earth processing. They control the supply chains for the green revolution. And now they're weaponizing that control. By banning silver exports, China ensures that Western green energy projects become prohibitively expensive, while their own domestic solar and EV industries have guaranteed access to cheap silver. It's industrial policy as economic warfare. And it's devastatingly effective. But it goes deeper. China's export ban also hurts Western military production. Advanced missile systems, radar equipment, communications technology, all of it requires silver. The Pentagon is one of the largest consumers of silver in the United States. If the military can't secure silver supply, weapons production slows down. This is a national security crisis disguised as a commodity market event. And what can the United States do in response? Impose tariffs? China doesn't care. They're not exporting silver anyway. Sanctions? China is the world's second-largest economy with the largest manufacturing base. Sanctioning them would cause more damage to the US than to China. Military action? Over silver? Not realistic. The United States is in checkmate. And the Chinese Communist Party knows it. This export ban is the opening move in a new phase of economic Cold War. And the West is completely unprepared. Enough analysis. Enough explanation. Let me tell you exactly what you need to do right now, today, this week, before it's too late. Because the window is closing fast, and when it closes completely, you'll be locked out of the greatest wealth preservation opportunity in modern history. I don't care if silver is at $79. I don't care if it was $65 3 weeks ago. I don't care if you think it's too expensive. Buy physical silver right now. Coins, bars, rounds, whatever you can get your hands on. American silver eagles, Canadian maple leafs, generic rounds from reputable mints. Just buy. Don't wait for a dip. There isn't going to be a dip. China's export ban guarantees that. Every dip will be bought by industrial users desperate for supply. The trend is up, violently up, and trying to time an entry point is how you miss the entire move. How much should you buy? As much as you can afford without jeopardizing your ability to pay bills and handle emergencies. If you were planning to allocate 10% of your portfolio to precious metals, make it 15%. If you were planning to spend $5,000, spend $10,000. This is not the time for half measures. Do not buy paper silver. Do not buy SLV. Do not buy futures contracts. Buy physical metal and take delivery. If you're buying from an online dealer, make sure they're reputable. APMEX, JM Bullion, SD Bullion, these are established dealers. Check reviews. Verify they have inventory. And be prepared to wait, because delivery times are already stretching to 3 to 4 weeks on high-demand items. If you're buying local from a coin shop, bring cash. Dealers are starting to add credit card premiums because their costs are rising. And inspect what you're buying. Make sure the coins are genuine, the bars have serial numbers, the weight is correct. Counterfeits exist, especially in a hot market. Once you take delivery, you need to store it securely. Not in a bank safe deposit box. If there's a banking crisis, you might not be able to access it. Not all in one place. If your house burns down or gets robbed, you don't want to lose everything. Split your holdings. Keep some at home in a well-hidden safe. Keep some in private vault storage. Keep some in a trusted location outside your primary residence. And for the love of God, don't tell people you own silver. Don't post pictures on social media. Don't brag to your neighbors. The fewer people who know, the safer you are. When silver hits $150 and you're sitting on 6 figures worth of metal, you don't want everyone knowing about it. If you want more risk and more potential reward, look at silver mining stocks. Companies like First Majestic, Hecla Mining, Pan American Silver, they're going to see explosive profit growth as silver prices rise. Mining costs are relatively fixed, but revenue is tied to silver prices. When silver doubles, mining profits can triple or quadruple. But be warned, mining stocks are volatile. They can drop 15% on a day when silver drops 2%. If you can't stomach that volatility, stick with physical metal. But if you're comfortable with risk and want leverage, miners are the play. China's export ban doesn't just affect silver. It's a signal that China is willing to weaponize its control over critical supply chains. If they'll ban silver exports, what else will they ban? Rare earths? Lithium? Graphite? The green energy supply chain runs through China, and they just demonstrated they're willing to cut it off. This means you should prepare for broader disruptions. If you own an EV, keep it well maintained because parts might become expensive. If you're planning to install solar panels, do it now before prices spike. If you rely on electronics for your business, build inventory buffers. The era of just-in-time global supply chains is ending. Redundancy and stockpiling are back. Share this information with people you care about. Your family, your friends, your colleagues. Most people have no idea what just happened on January 15th. They're not following the silver market. They're not reading Chinese Ministry of Commerce statements. They're living their lives, oblivious to the fact that a major commodity supply line just got severed. You can't save everyone, but you can warn the people closest to you. Send them this video. Explain what China did. Explain what JP Morgan did. Give them the chance to protect themselves before it's too late. On January 15, 2026, the global silver market as we knew it ceased to exist. China, which controls nearly half of the world's refining capacity and a quarter of global mine production, cut off exports. The supply line was severed. The game ended. And 17 hours before it happened, JP Morgan bought 50 million ounces because they knew what was coming. This isn't about price predictions or technical analysis anymore. This is about a fundamental supply-demand imbalance that cannot be resolved. The world needs approximately 1 billion ounces of silver per year. China just removed 450 million ounces from global markets. There is no inventory large enough to fill that gap. The math doesn't work. The system is broken. Silver is going to $100, then $150, then higher. Not because of speculation, not because of hype, but because industrial users will pay whatever it takes to keep their production lines running. And when the COMEX runs out of deliverable silver, when the paper market breaks, the real price discovery begins. JP Morgan knows this. The Chinese government knows this. And now you know this. The question is, what are you going to do about it? Are you going to act while silver is still available at $79? Or are you going to wait until it's $120 and wonder why you hesitated? The winners in this game have already been chosen. China secured domestic supply. JP Morgan secured 50 million ounces. Smart retail investors who bought at $30, $40, $50, they're positioned. The only question is whether you're going to join them or watch from the sidelines. The game is over. The only move left is whether you're going to claim your seat at the winner's table or stand outside wondering what happened. Make your choice. The clock is ticking. If this video opened your eyes, share it everywhere. Subscribe, comment. Let me know if you're buying silver or if you think I'm wrong. I read every comment. Thanks for watching. The game is over. Make sure you're on the winning side.